Izumi, Lynn here. I guess taking it forward one more step, and I note, as you said, so much uncertainty at the moment, but does this change the path forward for the Bank of Japan?
Yeah, that's a really great question. So with the BOJ, we do have a policy meeting this week on Thursday. I think expectations for a BOJ rate hike this week were already very low because the BOJ have been emphasizing that although the domestic data looks very strong with respect to wage hikes and price hikes, there's still a lot of uncertainty around the U.S. macro outlook, including the U.S. elections on November 5th. And then you add to this the domestic political uncertainty, and I think the likelihood that they hike this week is even lower, probably close to zero. Going forward, I think there is a narrative that political uncertainty and instability of the ruling government could actually cause a delay in BOJ rate hikes. But I think it goes both ways. Yes, the BOJ is probably not going to be hiking in an environment where markets are incredibly volatile or there's a very acute political uncertainty. On the other hand, if that political uncertainty causes the yen to weaken and causes sustained yen weakness, it raises upside risks for inflation, which was particularly why they hiked in July. So I don't think just because there's the ruling coalition's stronghold on power weakens, I don't think that necessarily means that the BOJ will be on hold for the foreseeable future. Obviously, you got to watch the market developments, but we could still be on track for hikes in January or even December, depending on where the yen goes.
Yeah, exactly. And on the yen, of course, it is trading at 3-month lows at the moment. And you've got strategists saying we could get back to 160 levels. So are we talking about potential intervention as well from the Ministry of Finance going forward? And again, a return of what happened in July, where basically the upside risk to inflation from a weak yen was cited as one of the reasons why they decided to hike.
Yeah, we think the threshold for intervention is still high, certainly higher than these levels. But I do think coming back to the BOJ, if you get prolonged weakness and some of the acute volatility in markets subsides, in the medium term, I think this increases the likelihood that they continue to pursue normalization, albeit at a cautious pace.